Worried about VAT and heard you can just split your business down to avoid it? Well, listen in. As a business accountant, my team and I spend all day long helping business owners on their journey. And one key problem that people incur quite often early on is as they start to be successful, they have a problem of approaching a point where they're going to have to VAT register. Their sales are getting to over 85,000 and it's going to be a problem for them soon. So then they start searching online and start wondering about how they can avoid it. Now, we're going to talk a little bit about whether it's possible to avoid it and some of the things you can do later in the video. But this particular video, I wanted to concentrate on the idea that you can just split your business down into bits and pieces. So for example, if you're a bed and breakfast, could you have a business that says, I sell the beds and the accommodation here and the food here, and those kind of scenarios. So before we get into this, if you like these types of videos, make sure to click the subscribe button below so you get notified whenever we release another one just like it. So I think the best place to start is just a very short recap on why you might have to register for VAT. So in the UK, if you trade in and you've got sales, generally, there are some products that are outside of this, but generally your sales go over £85,000 in a 12-month period, you're going to have to register. That's any 12-month period. So let's say you just ran your books April to March each year. It's not like you could get to 84,000 and then wait, hold off all your invoicing and invoice it all in the April because they've cut off last year. It moves with you. So if you're March to April, when you go into May, they drop off the last month and it sort of moves along like that with you all the time. So they will catch you if you do that kind of stuff. So it is this rolling 12-month as it's known. And when that happens, you've got sort of 30 odd days to register. So a lot of people, when they approach in this threshold, worry then about, oh my God, VAT, what am I going to do? I don't want to lose all this money. And the reason that is that they feel they're going to lose money is because if you're direct to the consumer, direct to Joe Public, quite often there's no benefit to you being VAT registered, and it is a headache. If you're cutting hair, and let's say an expensive haircut at £100, for you to still keep that same £100 the next day after being VAT registered, you're going to need to charge 120 in general. It's not always the case. And actually we did more videos on this, but it just gives you a feel for it. And the consumer, the public, is not going to want to pay the extra £20 potentially in this particular case. So we could talk about how to deal with that and everything else. I will give you some tips later on in the video, but that's the kind of feeling and the reason people suddenly start to look to avoid VAT. And of course then, if you search on Facebook groups, forums, Reddit, all these types of places where people will come and ask the question of, can I just split my business then? I've heard that's a thing. And you will hear these stories of people saying, oh, I've split my business down, and they've normally done it badly, and they're will get caught at some point, or that if they do actually end up on the radar, they'll certainly get hit for it because they've done it really, really badly. So I wanted to talk to you about how the revenue see this and some of the court cases that back all this up. So don't worry, I'm not going to bore you with legal terms, but it's just understanding the details. So what generally happens is HMRC view this as artificial separation or disaggregation of the business. It's stuff like, using that bed and breakfast example I told you at the beginning, there was a court case in 1999 actually where this happened, where a husband and wife, and actually about 3 of the leading cases that spring to mind instantly were all kind of husband and wife combos, and they tried to split the businesses down. Now some of those were successful at defeating HMRC, and they actually were treated as separate businesses for VAT purposes, and some weren't. Now this 1999 case, effectively they said, right, one of them runs the pub and the other one runs the B&B and the food, but everything was shared staff, shared venues, shared bank accounts, shared website. If you walked in, you would not know there were 2 separate businesses, and there was nothing that kind of financially and commercially kind of made any sense. You would expect that if you had a pub yourself and you wanted to kind of sub it out to somebody to run some food in there, you would charge them for the privilege, charge them to rent, something like that. And of course there was nothing like this. So the court case lost. HMRC said, no, we believe you're one business, so we're going to bundle you together and you should be VAT registered. Let's start having some VAT from you. So that is the kind of thing that happens. So it's okay, you can bobble on thinking it's okay, but if you fall foul of this, HMRC will come and group those 2 things together. Now it isn't always the case though, because we have seen some court cases following that in 2001 and actually recently in 2019. And the basic difference was, take the 2019 case, what happened was there was a husband and wife team again. They had a cafe and a restaurant next to each other. One ran one ran the other one, that's a mouthful to say, and not actually were they one business. So they said, look, we're separate entities, completely separate things, and both of them were under the 85,000. HMRC, of course, came along and said, no, we believe actually you're one business. The reason we believe that is because you've got one website, your wife works sometimes in the cafe, and the gentleman in the scenario was referring himself as the owner. So they kind of felt like, look, for us, the facts mean you're really just one business. The courts actually disagreed and said they were separate. And they looked at things like the fact there was rent being paid between them. They didn't share staff. They shared a toilet because of the way the buildings were structured. But actually, when they looked at it, they were completely different things. It just happened to be they were related. And yes, there was a tiny bit of crossover, but not enough to matter. So if you are thinking of splitting down your business legitimately, and some businesses do have different types of services like that where it can be, you need that kind of separation. So you want things like different bank accounts, different tills, different staff, obviously if you can, different venues and everything else in terms of premises. But if you can't, then you should be looking at, well, what would make sense if this was kind of like an arm's length deal? Should I be charging rent to them for what I'm doing in the building and all this kind of stuff? So, and you want to make it look like it is an arm's length company, because that's how it should feel to be able to do this kind of thing. And if that is possible, then you can do that kind of splitting. What you can't do is using a plumbing example, and the reason I pick plumbing, because we see a lot of plumbers every year where they haven't noticed they've gone over the VAT threshold and kind of, or they have and buried their head in the sand, and then you get to this point where you've got to go to cap in hand to the revenue and say, sorry, I should have been VAT registered, here's my money, please don't penalise me too much. And that's all possible, but using that example, you couldn't just break it down into same plumber, same website, same bank account, same phone numbers, everything, and just say, oh, I'm selling boilers through this arm of the business and I'm selling my labour and fixes through the other. It wouldn't work in that sense. So it's that kind of feeling, you want it to feel separate. So just bear those things in mind. And if you are going to separate them out and you think, do you know what, I have got a legitimate way to separate these things out, they can be different entities and I want them to be moving forward, then I would also recommend that you look at the sort of legal way that you trade. So you might have one of them be a sole trader as you, and one of them be a limited company, or two separate limited companies, or a partnership in a limited company. So again, it just helps with the segregation slightly if you look at some of the case law. So they're all things to bear in mind. So the answer is, it is possible, but in the majority of cases we see, it's false separation, it's artificial separation, and it wouldn't work. Now, I did say to you at the beginning, if you were VAT registered, I would give you, or had to be VAT registered, I'll give you a little tip on how to look after it. And the main one is planning financially. Shock horror accountant talking to you about financially planning, but basically you need to look at your pricing. Using that haircut example I spoke about, where you might have a haircut where it would be £100, then needs to be 120. Quite often, because you can get some VAT back on your costs, you might not actually need to charge that full 120. And actually, a lot of time, working with businesses all the time that do this, if you increase your price and you're good, you will lose a lot less customers than you think, if any. So quite often, and we do the maths for clients for this all the time, if you increase your price, say by 10-20%, and you lost 10% of your customers, you probably find you'll make more money for less work. So there's a really interesting maths to do. So don't worry too much about it. It is a big change. You do have more bookkeeping requirements. There is more cost involved. So it's kind of like a watershed moment for your business, and it can be a scary thing, but don't worry, seek professional help and you'll get through it. And if you want to be successful, you're going to want to turn over more than 85 grand, right? So it's something to deal with. So if you can't legitimately break your businesses down like that, then of course, and that's the majority of people, right? It's actually very rare that you see that sort of splitting down in a way that would actually work. Then you just need to figure out how you're going to deal with the VAT moving forward and move on to the next part of your business journey. So please do share this with anybody you think needs to know this information. Like, subscribe, and I'll see you in the next one.